Tonight we are tracking 5 heavyweight market movers: Apple, Goldman Sachs, Microsoft, Google, and UnitedHealth, which together represent over 25% of the S&P 500's total weight. They've all turned quietly bearish. But is it just a pause or the start of something bigger? Welcome to Stocks in Motion by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. With April's monthly close just days away, we analyze how these 5 are positioned to influence the broader market. We'll break down the live Elliott Wave structures, uncover what their candles are signaling, and explore whether momentum shifts are temporary or warning of a deeper move. Got a ticker you want us to chart next? Drop it in the comments. For high conviction setups, check out our private Discord where Master Trader Kyle posts daily surgical entries and exits. And don't miss our daily market waves and weekly digest, unmatched multi-angle coverage of indices, commodities, bonds, volatility, and more. Subscribe, hit the bell, like, and share, because timing is everything and the turn waits for no one. And today we start our discussion with Apple. This is the daily map, daily closure, and the weekly closure today for Apple. So what we are seeing, there is a possibility for the daily candles that they formed a bullish harami here. However, the way it happened and the technical support is very little here. And if we look at the bigger frames, which will be closing next week, so far they are tracking somewhat bearish. If we look at the weekly closure, there is no conviction here, and last week Apple formed a thrusting line, and this week a red candle technically negated this potential bullish move. So far this is bearish. And on the monthly closure, Apple is trailing towards a big bear reversal, and this is just the monthly frame. If we look at the 2-month frame, for example, this is gonna be a strong confirmation if nothing happens between now and April 30th. So Apple needs about 12% just to make it less bearish from that perspective. So let's see what happens next. And one thing that I wanted to say, on the monthly frame, we have a freshly made bearish MACD cross, which most likely is gonna be recorded at the end of the month. Now let's move on to the next chart, and this is practically the monthly MACD cross. This is what happened. What is going to happen? I highly doubt Apple has enough power to reverse this cross at this moment, and it would need well over 10% in the remaining 12 days in order to reverse this cross at this level. And another concerning point, this is what I'd like you to show, is that Apple, it looks like it is tracking towards completing a 2-month bearish MACD cross, and if it doesn't happen this month, most likely it will happen in the next period of 2 months. And I run some preliminary statistics analysis for the crosses like this. So there were only 8 crosses in the whole history of Apple on the 2-month frame, and each of them was driving very significant decline. So the statistic says that the range of the declines was from 18 to 82%. So far, if we look at Apple, it's already down 24%. That is technically officially in the bear market. And the average for these for the declines of the top for these MACD crosses was 48%. So let's just make a map of where Apple could go. So let's do it with the rectangle, for example. So the upper upper will be 18% upper level. So this is 18%, 48% decline would be somewhere here. Let's mark it with a price tag. So this would be the average point and the range. Okay, so I was always right. So 82%, approximately 82%. And now we have a potential range for the decline. So let me make it with a different color. This is potential range from 212 to 46 with an average 133. Well, that's the perspective for Apple. And I would like to say that in case of an average decline, Apple would find support at the 50 months. This is not 50, this is 100 months moving average. This is the blue line. We remember this is a 2 months frame. So it's 100 months moving average. And for the worst case scenario, this is the red line here, which is a 400 months moving average. Well, that's the perspective, technical perspective for Apple if it makes MACD bearish cross on the 2 months frame. Well, it looks like an exciting ride could be in the cards. Now let's have a look at the Elliott waves. This is the chart that we've been tracking since the beginning of January. We've said that Apple formed an impulsive wave down and it has all chances to extend lower. At the time, our target was 204 to 180. Right now, Apple made it to up to 168, and right now it bounced 210. So this was our continuation chart when we tracked the first wave down, and then we were expecting Apple to continue down on March 10th. So far, this is the chart that you are seeing. So Apple hit this level, and I would expect it to be either wave C of an ABC correction or potential wave 3 of a much bigger impulse down, which could be wave 4 with wave 4 here and wave 5 down there. And this, if this happens, and it's still a possibility, Apple would drive the price towards 150, somewhere there. And this wave, if it forms an impulse here, it would be just wave A of a much bigger correction. So I drew this line here. This is low 218.20. Let me mark it here. This is 218.20, and the coordinates, yes, very well. So if Apple breaks above this line, so the impulse, potential impulse 3, 4, and 5 will be 1, 2, 3, 4, 5 will be invalidated. And in this case, we would be looking for an ABC correction, and most likely this is going to be wave A of a much bigger move. So once we have this wave, we would be looking for potential something like this. This would be A, B, and C, something like this. However, it's very preliminary again, and I would like to emphasize it. And this would be wave B of a bigger correction. So wave C would be down, and it is a bit premature to discuss it right now. So now let's move on to the, not this one, to the next chart. This is the long-term perspective that we outlined way back in January 16. So the chart remains the same technically, and I continue to be looking for two possible paths here. So this would be an A, potential B, and C here. As you can see, it landed right in the middle of our target, and this would be a potential wave 1, 2, 3, 4, and 5, somewhere here. This would be wave A of a bigger correction. So technically it is aligned with what we were seeing. And this was the latest chart we made on March 10 so far. After that, Apple managed to hit our target. Well, and this was technically another call. The call in January was based on an ending diagonal that we were seeing for Apple, and 164 was the level of origin for this ending diagonal. So the Elliott waves played perfectly. Well, that's the perspective for Apple, and I'd like to emphasize one more time. So if Apple doesn't make it through 218.20 and makes a lower low here after this corrective wave up, it would be a bigger impulse. 1, 2, 3, 4, 5, potentially wave A of a much bigger degree. But if it crosses, it's gonna be a blue scenario. Well, that's for Apple. Let's now move on to the next chapter of our today's discussion, and it's Goldman Sachs. So, what is happening right now? Goldman potentially forming a bullish move here. This was a big bullish engulfing, and these 6 candles, possibly a consolidation flag or something before Goldman moves higher. However, I wouldn't be that sure at this point because the weekly candles are still bearish. So this was a thrusting line last week, and this week it formed an undecisive doji. So technically the bullish perspective wasn't negated, but the bearish one wasn't confirmed either. So far on the weekly frame, Goldman sits below the 50 weeks moving average, and technically it is bearish. If we look at the monthly perspective, so every closure below this line, which is approximately midpoint of this red candle, would be bearish. And this tag, again, it's approximate 585. And in order to make this type of move, Goldman needs to rally about 15% between now and the end of April. Well, it's a challenging task. However, I think it's quite possible. Let's see closer to the end of the month how Goldman is doing on this. Now, this is the chart that we shared last time with our subscribers on March 29th. This is absolutely the same chart, and I forgot to change the date. So today is April 17, and you can see that Goldman is doing absolutely perfectly following the chart. Now I can say that it completed an impulse down, slightly lower than I expected initially. Waves 1, 2, 3, 4, 5 are fairly clean, and now it is forming a corrective wave up. However, I would like to emphasize that this is still a possibility for making it a little lower if Goldman makes this type of wave 1, 2, 3, 4, 5, and this would be wave 5 technically for wave 8. This wave 5 could extend right here. However, if it crosses above this level, and this is March 31st low, to be exact, it's 528.73. 528.73. So if it crosses above this line, so technically this potential impulse down would be invalidated, and we would consider this as wave A. So far, Goldman is forming wave according to our path, and there is no other updates on this chart I'd like to make. We'll see how it develops, how it plays around this 528.73 level. Now let's have a look at the bigger chart. This is when we started seeing issues, technical issues with Goldman. We alerted that it might be close to the top on early in November, and once this formation was completed on March 9, we shared this chart with our subscribers. This chart remains the same, and you can see it's already in the middle of the target area, the most typical target area. However, it can go a little lower, and this is, so far, it is a concern, and I would like to bring you another view here. This is indeed a concerning one. So this is the monthly frame that we discussed, monthly RSI, and the monthly frame that we discussed with our subscribers back in February, on February 2nd. And today is April 17, and I think we can get some update here. So what I'm seeing here is that RSI was unusually high for Goldman on the monthly frame, and technically, if you look at the all-time frame, it puts it together with the RSI that Goldman made in 2007 and also in 2021. So this would be somewhat similar from the perspective of the magnitude and volume. So let's see how it develops. And another thing that I would like to mention, that on this large frame, we are seeing a big RSI divergence here. Let's see how it develops and what kind of move it makes. So far, Goldman is on track for lower lows, and it's not looking good for the giant, for the financial giant on the monthly and 2 months frames. Now let's move on to Microsoft. This is our regular discussion. We do it almost on a weekly frame and every week. So what Microsoft did today was not very good move. It's a bearish move, and it closed at a lower low below the low of the previous candle. And if we look at the 2-day frame, we can see a strong bearish engulfing here on the 2-day frame, and the current candle will be closing on Monday. Let's see what it does. At this point, I'm expecting a move lower. On the weekly frame, we had previous week formed a strong bullish engulfing. However, this week, a very strong dark cloud cover, technically negating this bullish engulfing. Now the odds are with bears. If we look at the 15-day frame, which is closing, I believe, on Tuesday, right? So this is a concerning part. We are seeing a flip 8x20 EMA lines, and the candle so far is looking bearish. If it moves a little lower on Monday, Tuesday, it will definitely be a bearish closure. And speaking about big frames, the monthly and 2 months frame, they are also looking bearish for now. Now let's move on to the next chart. This is the one that we tracked before. This is the head and shoulders that we outlined back in October, saying that Microsoft is probably going to do, and it looks like it is favorite chart so far. Execution is quite perfect. We are seeing in year 2022, it was a break below the neck, then a back test about the neck and the rejection and the move lower. The same thing is happening here. A break, an attempt to reject, and a push back down. So the charts, the targets remain the same as we outlined them way back in October. Yes, and based on some technical estimates, the move can be lower towards 280. This is the long-term chart that we discussed way back in October as well. Microsoft, right now you're seeing that it is approaching the first target level, 341. So far, no changes here. Our expectations remain the same. If we look at the shorter term chart, this is our call on December 18 for Microsoft. We said that when it was 437, right now at 367. So far, no changes here, and Microsoft had a very good chance to form an impulsive wave here. So far, it's been 1, 2, 3, potentially 4, and if it makes a lower low somewhere here, we would consider this as a wave 3 of a potentially bigger impulse, which could be 3, 4, and wave 5 down there. However, again, if it moves higher, then it would be a bigger consolidation before moving lower. So far, the blue path is prevailing and has better probability. Speaking about Microsoft, this was our very early harbinger back in October 1st, when Microsoft was probably the first among the big companies to form a MACD bearish cross on the monthly frame, and we've been tracking it since. What we are seeing here is the potential for, this is our some statistical estimates here, potential to move towards 285 or find support at 100 months moving average. This chart remains unchanged, so we are tracking it. Let's see how Microsoft closes April and bigger frames. Now let's move on to the next one, and the next one is Google. What we are seeing here is very similar candle setup that Microsoft made. Also bullish engulfing candle, technically negated with a dark cloud cover. Maybe not that strong, but still the price is back below the 100 weeks moving average. If we look at the monthly frame, in March, Google technically confirmed a reversal here. And right now, this candle, I would say it would be very important. And if Google is to go downward, I would say that the candle needs to be green. In this case, it would be just a plain continuation, bearish continuation candle. However, it should be with a small body, most likely a doji. If it forms a red doji like this, it might be a ladder bottom and the reversal pattern for a bullish reversal pattern. So let's see how it develops. If we look now, let's have a look at the Elliott waves. So what we are seeing here is the chart that we made back in February when Google was 184. And now what we are seeing is a very strong impulse here. And today is April 17th. So this is, I can consider this as an impulse. This is wave 3 and 4 and 5. So technically, this is a very bad news, because an impulse down, it means that it's going to be another impulse or at least a comparable wave down. Now, Google might be working on an extended wave B of a bigger corrective action. And at this point, this wave upward is corrective. It could be a bearish flag, for example, something like this, or it could be a more complex wave. I would make it let's say this would be A, wave B, and wave C. Potentially, this could be a flat or a zigzag, something like this. At this point, let's see how it develops, and the most important thing would be to monitor how it closes around the end of the month, because it would be forming very important candles, and if it closes right here at the top, we might see a reversal potential. Well, so far the wave is bearish, and one way or the other, I would expect this correction to end and Google to move further down, explore lower levels. If we look at this great chart that we shared with our subscribers way back in February, saying that Google completed an ending diagonal for the final wave, and we should be aware of a very sharp reversal. So far, we can see that Google surpassed the level that we expected it for wave 2 in this scenario, and now we have to reconsider something. So this wave, and most importantly, it made a cross with which overlaps with October 2023 high. So what is important here is that now we are looking for a different degree, and now I can change this wave into this one, and now we would be looking for a wave like this. So this would be wave 1 of a bigger impulse, and now we would be looking for wave 2 somewhere here, and this would be a blue rectangle for it. And we know that for Google, retrace of 0.5, 0.62, or 0.78 of the length of wave of the initial wave is quite normal. And now if we are looking for wave ABC, considering this first impulse is done, we might see wave B and wave C here, and obviously this would extend for much more months. Well, that would be the new perspective, and I would like to make this update here. So this is an April 17 chart. This is the new perspective, an updated perspective for Google. Well, now let's move on to the next patient of our discussion, and that's UnitedHealth. So what we are seeing today is a very brutal decline, and however, I would say if I were monitoring it very closely on the daily basis, we would have predicted this one, because technically the last wave was a clear ending diagonal, and we should expect something like a sharp decline, but not that sharp, obviously. I wouldn't be able to forecast a 22% drop. However, if we look at some of our charts, something like this. This is the chart for UnitedHealth that we shared on February 23rd, when when UnitedHealth was right here. So this is February 21st, 23rd. As you can see, it moved higher, and I think that this is wave A. Now this would be wave B, and potentially UnitedHealth would be working on wave C here. However, I cannot say that this was the entire wave B here. However, this is a possibility, and I will put it as an alternative here, alternative B. So UnitedHealth perfectly executed our forecast, and it even breached through our target area. So far, this is potential an A, B, C formation here. However, this wave has a huge gap, and so far it looks impulsive. If UnitedHealth makes it 1, 2, 3, 4, and 5, something like this, it would be a very strong impulse down, potentially starting wave C. And we would be looking for this possible pass also here. Well, so that's right now UnitedHealth is extremely oversold, and it has a very good chance to move higher at this point. However, the question is how high it would go and what kind of wave it makes, whether it's a corrective wave or if it's impulsive wave. If it is impulsive, I would be expecting wave C of B, and then we might have wave C here. So this target was complete. We can remove it for now. And this is the potential. But right now, the next move by UnitedHealth will be up. And now let's get back to the previous chart. What we're seeing here is that, let's see the weekly closure. Obviously, weekly is a strong bearish inside down candle with a very good perspective to move further down. Let's see, after the move like this, we can see either consolidation for several weeks or immediate move upward. So maybe a consolidation and a move down. Let's see what kind of candle the next week develops. If we look at the monthly frame here, the monthly so far closes with the bearish candle if it does like this, and this is a special chart that we discussed back in February about the perspectives for UnitedHealth. We are saying that it is on track to form an 8x20 EMA bearish monthly cross. These would be the normal targets, normal statistical targets, and this would be something that UnitedHealth didn't make since 2008. These were 1996, 1998, and 2008. There were only 3 recorded crosses like this. And on average, it would be a decline about 49–50% after these crosses. That's the perspective, statistical perspective. And if UnitedHealth finds its support at the 200 months moving average, I wouldn't be surprised. And another very interesting perspective that I wanted to share is this one. This is an annual chart for UnitedHealth. We were seeing 14 years of green candle. This is an extreme stretch by candlesticks perspective, and the last year, 2024, we were seeing a bearish engulfing of this tiny doji, which together with the 3 last candles forms an advance block. So this is an advance block. Last three green candles. So far, if this candle closes below the low of the previous year, we might see a multi-year decline. And this is the estimates that I made back then in the annual review, somewhere between 33 and 55%, which is pretty much would align with this estimate by 8x20 EMA bearish cross. So that's the perspective for UnitedHealth. This is the chart. Now we know where to look for. And today is not February. Today is April. This is April, February. It's the last time I made the change on this chart. All right. So what we just see, Apple is building momentum in wide target range. Goldman Sachs is quietly breaking down below major moving averages. Microsoft continues to build a towering top, technically concerning on the big frames. Google closure in April will be extremely critical. And UnitedHealth is definitely underperforming its sector with a likely continuation setup. Together, these five stocks could tip the balance for the S&P 500 as April draws to a close. If you're done chasing headlines and ready to trade with structure, timing, and statistical edge, visit investingangles.com, the home of candlestick, Elliott Waves, and deep multi-frame setups. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.